Welcome back to another quick stock analysis, and today I want to talk to you about Tattooed Chef. This company, I've been getting a lot of emails and comments and Instagram DMs all about this Tattooed Chef company. It seems to either be very, very popular, or there is a huge mass media campaign that is trying to get in touch with YouTubers and things like that. However, there's been such a massive bombardment, I think I need to cover it. Tattooed Chef is a plant-based food company. It's basically a frozen food company that is making everything about really nice food and vegetarian stuff and saving the planet and all that sort of stuff. Quantitatively on fast graphs, it looks pretty good. Genuine Impact, which has value investing as its main sort of strength, has Tattooed Chef down as a medium quality company, a very expensive company, but the momentum is very, very strong. At first glance, you think, oh, this is a great little company, a great little find. But this company is growing at a PEG ratio of 52 and a normal PE ratio of 72. So we could say that this is quite overvalued. We're looking at a 16 times, 17 times price to sales. 3 to 4 price to sales is probably quite a good one. Anything really higher than that, you're starting to look at overvalued territory for these. Maybe speculative, but also early growth. I'm going to call this an early growth company right now. Historically, not a ton of data on Tattooed Chef. Shares outstanding are going up, but that's totally expected, and only going up at 30%, which actually is pretty good for this very new startup or very new IPO'd company, or I don't even know if it was a SPAC. I don't care if it was a SPAC. And it looks like it's only just recently gone to market, so it technically has a massive revenue growth, up to 148 million. Negative free cash flow and only getting worse, but that is okay. In this situation, it isn't necessarily bad to have negative free cash flow. But what is very good about this company is it has a 6 times current ratio, which is extremely good, but also this net profit margin right now of 45%, that is very, very promising. Because these products are apparently very easy and very cheap to make. And they can mass produce this, they can ultra process it so it tastes really good. There's certainly a lot to like about this company. However, this company does have negatives. This business model is extremely easy to replicate. Even I was making cauliflower pizzas just as good as these all in 2016. So if anything right now, Tattooed Chef could be just completely late to the game. Also, big food is very easily catching up. Because Tattooed Chef has such a massive profit margin and such an easy business model, the food is so easy to make, the big companies like Tyson Foods are all getting on board and creating massive, massive competition. But that doesn't mean it's over for this company. It's got great products, a great brand, and a great profit margin. It feels very similar to the best performing stock over the past 20 years. You get 10 points for guessing what company that is. 1, 2, 3. Good, you're right. It's Monster Energy. Did you know that? Monster Energy is the best performing stock over the past 20 years. Since Monster Energy IPO'd, it's gone up 110,000%. 110,000%, really. And this is another company with a very high profit margin, a pretty good product, I guess. But most of all, it's got this very strong brand. And this is the sort of moat that can get provided even though you've got tons of competition. Monster has generic competition from supermarkets. It has a lot of branded competition as well. But for some reason, Monster just came out on top. But Monster didn't get off to this mad head start that Tattooed Chef did. It hasn't benefited from a crash or anything like that. It simply started and it grew with its earnings. And for the first 3 years, nothing really happened. It did go up 100%, but to be honest with you, no one really knew what Monster was going to do at this time. But after year 3, you actually lose 50% of the total return. If you bought 3 years after the IPO of Monster Energy, you'd only be up 53,000%. So technically, if Tattooed Chef is going to follow the same journey as Monster Energy, you've already lost out on 50% of the total gains the market could possibly give you from Tattooed Chef. And Monster Energy had amazing revenue growth. Very similar story to how Tattooed Chef started off. But the share price appreciation really started to get juicy once we learned that Monster Energy was going to start growing properly. Monster Energy also very rarely traded over a PE of 23, and whenever it did get as high as, say, what Tattooed Chef is right now, PEs of 40, 60, that sort of thing, Monster Energy, because of the product type, because of the way the business is set up, always reverted back to the mean. And where we are with fast graphs right now is that we're at a PE of 33. What I'll do is I'll set the expected PE of 25, and I'll have the growth going up at the same rate as Monster Energy at about 28% per year. Well, with that in mind, over the long term, over the next 5 years, you could see a price appreciation of 229%. Not bad. This is assuming that they don't add any more debt and they also don't dilute you with any more share issuing. So ultimately, my opinion is that Tattooed Chef is a very unproven company right now. The potential for this company with the profit margin, the product, and that possibility of that really good brand, you can easily take Monster Energy and think, wow, it really could be that. But Monster Energy has this very special kind of brand. It had a very special thing in gaming and extreme sports. Tattooed Chef really needs to jump into that hipster vibe, that whole LA, whatever, I'm doing good for my body sort of vibe. It really needs to be at the forefront of that, and that really needs to stay cool for a long, long time. Otherwise, other companies will come in and just price them out. So Tattooed Chef does have amazing potential. It's got barely any debt. Monster Energy has literally no debt. But I do fear that this company is being hyped up quite a lot, and it might be being hyped up by, I don't know, something else going on. For some reason, the amount of people that have asked me about this company, it's just so strange that so many people would ask me about it. It feels like maybe, I don't know, it's being pushed, media campaign, or I don't know, even bots. It feels really, really strange. And it's really bad to say Tattooed Chef is growing rapidly, get in while you can. That's a bit much. However, it does have the possibility, and maybe going forward, if you're extremely high risk and you're willing to, take quite a speculative, still a speculative sort of gamble going forward, maybe buy this company on forms of weakness and just maybe let it grow over the few years, because it could potentially turn into another Monster Energy. However, if you're trying to be a bit safe, maybe take a little less risk, maybe just wait a few years, put it on your watch list and wait and see if this growth really starts to take off. If this company starts to have 3 or 4 years of quite significant growth, it'll have some great years like 90%, 200%, 171% growth. These are all excellent numbers. If it's doing this consistently over 3 to 5 years, then you've got a product that is kind of going somewhere. And again, from a price to sales point of view, Monster Energy didn't really go over 5 times sales, and it really hung around about 3-4 times sales. So if we're trying to compare a few moats here, maybe Tattooed Chef is a little bit overvalued right now, and it's just not the right time to buy. Maybe in a couple of years when that price to sales ratio just contracts a little bit, or maybe when the price drops, that might be a good time there to buy Tattooed Chef. However, if you have a lot more risk and a lot more speculation, and you believe that Tattooed Chef is going to the moon like Monster Energy has, then really buying right now and waiting 20 years is going to make you a ton of money. Thank you very much for watching, guys, and if you enjoyed this video, please feel free to like, subscribe, and invest.